Thank you, everyone, for joining on your Friday afternoon. We all know how you guys could be doing a lot of things right now, especially if you're on the East Coast. But welcome to Hive Nation's first expert event panel. My name is Jade, and I'll be your moderator for today. So I'm also Hive Nation's community contact director. So if you have any questions about this event or Hive Nation, please reach out to me directly, either through the Hive Nation community app, which you can download for free on all platforms, or you can email me at community@hivenation.com. So thank you all for joining us. Today, we'll be discussing how to reach financial freedom as an independent consultant. At the end of the event, we'll be opening it up to a Q&A, so please feel free to drop your questions in the chat, or you can use the raise your hand feature at the end when we start our Q&A. So today, we're very lucky to have an amazing panel of expert guests who have collectively been working in the financial industry for decades. We are very lucky to have them with us today, so thank you all. We have Gil Lackritz, Greg Fox, and Tali Vaughn. Thank you. So we're going to go ahead and start it off with Gil. If you could please introduce yourself and tell us a little bit about who you are and what you do.
Thank you, Jade, and thank everybody for joining us today. My name is Gil Lackritz. I graduated with an accounting degree and spent several years as CPA. And then I went and owned my own businesses for about 25 years. About 15 years ago, I sold my company and I started helping people with tax and financial planning. And business has just grown organically. In the process, I have several clients in the SAP world, and I realized that there's needs for advice and consulting in that area, because being an independent business owner in today's world is very challenging, and you need as much expertise as you can obtain. And I think Hive Nation is trying to fulfill that role and be able to provide consultants access to expertise and consultant who can help you reach your financial freedom.
Thank you, Gil. Greg?
Hi, thank you for having me on this. My name is Greg Fox. I work with Terramar Wealth, which is a holistic financial planning company. I've been in the industry since 2011 in some sort, and what we do is we help our clients analyze their financial situation and provide a plan that gets them to and through retirement to fit their goals and needs how they would prefer.
Thank you, Greg. And Tali, take it away.
I'm Tali Vaughn with eGPS. I am a third-party administrator. Now, I can tell you nobody on this call, minus our panelists up here, have any idea what that means, and that's okay. I'm basically the retirement compliance nerd behind retirement plans. So while you guys are getting into, doing this independent business owner deal, tax deductions are really going to be a focus probably around year 1 or 2. And how do we get tax deductions? Yes, how do we save for retirement is definitely Greg's wheelhouse. How do we get deductions is Gil's wheelhouse, but someone has to put it all together, and that's me and my team. I draft the legal plan document, tell you what's legally allowed, how much you're legally allowed to save, all the required tax forms, legal plan documents, all the fun stuff in the background that nobody thinks about, that nobody knows is there. That's me. I do all the nerdy stuff in the background that nobody wants to do.
Thanks, Tali. Yeah, and you really said it in such a great way, especially year 1 and 2, but even throughout, your lifetime as a consultant, especially with fluctuating incomes, and without the backing of a large corporation to really set this up for you. You're now having to put in a 401k for yourself, and what does that look like, and how do you even do that, especially on a fluctuating income? I know a lot of times in consultants, not just in this industry, in the SAP industry, but well, I'm in Los Angeles, so I meet a lot of artists. And there tends to not be any financial planning. So it is important to start now, even if now means you're ready for retirement in 10 years. So Gil, going back to you, I want to talk about some of the benefits that you specifically offer for independent consultants. So what does that mean, with you as a tax accountant, why someone would need to set up certain things with you? Like, why would someone need your services? So, the beautiful thing about Hive Nation is that all of our panelists here are on the Hive Nation team in some way, shape, or form. And so whether you're just starting out or, like I said, you have 10 years before you want to retire in Boca, you can come to us and we can help figure it out from, starting the formation of your corporation to, hey, let's plan out what you need to do, how many more jobs you need to book to land in Boca, and make that happen. So Gil, why don't we start to explain how all of your different positions as an accountant, as a wealth manager, and as a financial retirement planner really come together?
So let me start with the difference between being a W-2 employee, independent contractor, and not everybody should be independent contractor. I think a lot of people are a lot more comfortable getting a paycheck every week and not having to worry about administrating and managing basically their own business. Even if it's a one-person business, it's still managing a business. Okay, W-2 employee, you do get sick pay and holiday pay and other benefits like unemployment and disability. So when you become independent contractor, all those benefits become your responsibility. Okay, what you gain by being an independent contractor is the ability to control how much you want to spend on specific items and when do you want to spend it and how you're going to spend it. The biggest advantage as independent contractor, according to today's tax laws, you're going to end up paying significantly less taxes as an independent contractor. Again, that's a pretty broad statement because tax returns are like snowflakes. They're not two identical ones. And people always come to me and tell me it's simple. Mine is very straightforward, and it's never straightforward. It's up and down and everything in between. But as an independent contractor, again, one of the benefits today as an independent contractor, you qualify for the qualified business. It's called QBI, which actually get you discount on your income 20%. The IRS give you 20% of your income that is not taxable. So just that alone, if you're making $200,000, will save you taxes on approximately $40,000. Okay, on $40,000, if you live in a high income state tax like California, you're going to save about $12,000 to $15,000 in taxes every year. That's $12,000 to $15,000 that you can put into your own 401k that you wouldn't otherwise. And if you choose to invest it smartly, that $12,000, $15,000 extra $1,000 every year that you invest in your 401k tax-free is going to grow and obtain your financial freedom within 10 to 15 years.
That's kind of where Greg would come in, right? Like, so where do you invest that 10 to 12K to make that grow?
Well, it goes through Tali first, because Tali has to administrate your 401k and set it up so you can maximize how much you can put in, which is a great benefit, because if you work for a company, the maximum you can contribute if you're under 50 years old is $19,500. Okay, as an independent contractor, you can put almost as much as $63,000 on. So it's a huge, significant difference how much you invest in yourself or in your retirement. And Tali is very talented in doing that.
Well, Tali, do you want to take it away and take it from there?
Sure. I like to always say there's three legs to the retirement plan stool, right? There's the client that talks to their CPA and accountant and goes, hey, I need tax deductions. how do I get that and how much can I save? And then Gil goes, I don't know, let's call Tali. And then what I do is I gather that data, right? Gil said it perfectly. Not everybody is fit to, kind of run their own business. There's a lot to it. But part of the advantages to running your own business, and a lot of times you might be an LLC if you set it up that way, or a sole proprietor if you set it up that way, right? There's different types of definition of compensation and all of that. And poor Greg is like, I don't know, call Tali, right? So it's nice to start with me because I'll dial it in and go, okay, you're a sole proprietor. Let's talk about your net schedule of fee income. And they go, what? And I go, okay, give me that data, which Gil will help get for us. And based on this, we can design it this way, and this way. Right. So I like to say, Gil kind of kicks off the conversation because usually it starts with, hey, I need tax deductions and I need to save for retirement. Then I build the plan and say, okay, based on what your earned income is, and here are the plan rules and how much we want to save and what your predictability is and all these really fun factors. And then we go, okay, Greg, we're ready to go. Hey, we need you to help get an account set up for these guys, get the investments flowing based on their age, based on their risk tolerance, based on what they already have for maybe a prior 401k, right? Or some rollover assets, right? And that's where kind of Greg comes in. And Greg's going to help find that, I call it a bank account. He's going to roll his eyes. That's not what it is, but that's what it is. The money holder, right? Greg's going to help establish that. Greg's going to help build those investment opportunities and platforms around that 401k that I'm going to write that legal document for. Does that kind of make sense?
Yeah, I can kind of see the process there, and how we talk to each one of you guys. So Greg, what does that look like kind of on the tail end of this line here?
Definitely, and I think that's where the benefits of what we do come in, is that third leg right there, like Tali and Gil had mentioned, is when you come to us, once that plan's set up and the rules and the legal stuff behind it is defined, then we can start tailoring it to the individual and how much makes sense to be put in there. So financial plans they vary significantly between W-2 employees that sit next to each other at the same company. So when we're talking about independent consultants that as much of snowflakes as Gil put it, there's no situations that's the same. So that's when we can sit down with you and we can really go over your plan, find out what's important to you, what are your goals, what are your needs. That kind of planning process is what I think is the biggest benefit of working with us.
So what are the most important things to set up immediately? Let's say, we're in year 1 and 2 if you just started your own business, you just left Accenture, Deloitte, whatnot. And Gil, we can circle back to you. What are some things that people need to set up immediately?
I think the first thing is a good bookkeeping system and keeping track of how much money you're making, because that's kind of where you start. A lot of people wait until the end of the year to figure out how much money they made and how much taxes they have to make. And if you set it up right and you're consistent and keeping track, okay, you can make some tax planning decision as you go along, as well as business decision. I mean, you can, and that's where I think a lot of independent contractors are missing out. If you're going to go through the trouble of running a bookkeeping system, you should really do it on a timely basis, not from necessarily because you're going to have to do it anyway. So putting away is not going to make it go away. But what I found out of my experience is once you start looking at your expenses and how much income, you can make a much better business decision on an ongoing basis. The other thing is that you should be worried about is, as an employee W-2, you automatically get covered by workers' comp. And I think a lot of people missing the fact that they should buy disability insurance as soon as they become, because you never know what's going to happen. And when you work for somebody, then workers' comp covers some of it. However, as an independent contractor, you should really look at disability insurance. Those are kind of the two immediate things I can think of.
What would happen? I mean, if you kind of, unfortunately, God forbid, you have something happen and you try and do that kind of after the fact.
You can't do that after. I mean, it's like getting home insurance after your home burned down. Okay.
Because
And,
sometimes,
and just so we're all clear, I mean, disability insurance is a lot more comprehensive than workman comp, so you're going to get a lot more benefit. And if you are the breadwinner in the family, it's your financial responsibility. And a lot of people buy life insurance before they buy disability insurance.
Yep.
And I can tell anybody who's buying their own life insurance, they're never going to see the benefit. So actually, that's not true, but it's mostly true. But disability is real. And again, especially, we just went through 2 years of COVID and people may not have been able to work. And if they had disability insurance, they could have had some income coming in. And so that's a critical path. I mean, just like one thing that I find a lot of independent contractors don't realize that they need when they quit their job, where they were covered by their employers, and now that they're operating without.
yeah, I mean, even before, states, or I guess federally, really started mandating health insurance and health benefits, a lot of independent contractors did without as well, and kind of hope that nothing would happen. And yes, I've seen that where things do happen and then they set it up. Of course, it can't pay for what had happened, but hope that in the future, now that they have it set up, they'll be taken care of. I'm glad that you brought that up because that is something that does get oftentimes overlooked. Greg, in terms of really trying to set up your own financial freedom, what are some of the things that when you have new clients that you look for them to start immediately, or hopefully that they already have?
So I'd say that the number one thing, it's actually pretty much what Gil was saying. But even on the expense side, setting up a budget, it's probably the boringest and least sexy part of personal finance. But it's critical, especially when you have fluctuating incomes and fluctuating expenses. It can be very difficult to set that up and have numbers that you have to abide by. But when you're going to have very lean months and very strong months, it's nice for those lean months for you to have somewhere to pull income from, to almost subsidize your income. And those strong months, it's nice to have a place to put that money, have it working for you, and maybe move up that retirement age or improve your retirement experience.
And Tali, for setting up something like a 401k or the various different types of plans for sole proprietors, what would be the first thing that they need?
Yeah, it's funny because Gil kind of touched on this a little bit, right? A lot of times we're looking in like at the end of the year, right? And going, okay, now I know how much income I have. What do I do? Well, it's a little tough if you are a W-2 employer to then kind of make up for lost time. But I think the advantage when you're in this LLC or sole proprietor, right? That 1099 contractor, you get a 1099, you guys, you're a sole proprietor. Okay, that's if you didn't establish an entity saying you're an LLC, you're a sole prop. But the nice thing is when we are at the end of the year and we're looking at everything and kind of estimating what our deductible deductions are going to be, or what our income potential is going to be, having that shell of a 401k plan either established or as an option is a great opportunity for that flexibility. So it is very inexpensive, especially under the Hive Nation platform, to start that 401k. So we usually call them solo 401ks because a lot of times our independent contractors that are just going out don't have any employees, right? And starting that it's super cost effective, and there isn't really a commitment of what I have to put in. So the nice thing to kind of get started is, let's look at kind of what Greg is saying is different buckets of money that we could have access to and that we need. Look at what Gil is saying is, okay, great, we've got these contracts coming in, we've got this money coming in, but we have to have places to put it. Yes, we need to do the boring stuff like balance and, have a bookkeeper and all of that. But at the same time, retirement plan, the earlier that you use it, is the earlier that you're going to get that compound interest that Greg's going to help us set up. So whether it's the first year or the fifth year of being in business, really looking at your expenses and your expendable income and those tax deductible options and go, okay, great, we have an in-home business, or we rented an office space, or got ourselves some new equipment, but where else can we put money? And a retirement plan is often one of the last things they think about, where maybe I'm a little biased here, but Greg and Gil might agree. It's one of the kind of the first things that should be looked at as well, because if you don't use it, you lose it. Everybody gets $20,500 if they're 50, if they're under the age of 50, and $27,000 in a 401k, right, contribution opportunity. And if you don't fund it in 2022, there's no way to say, okay, I'm going to do $41,000 in 2023. Just not how it works, right? So the sooner we start saving is the sooner we start building those different buckets of money that the guys were talking about.
Is there a minimum that you'd have to put away to kind of make a significant dent in your future? Let's say you're just starting out and you just bought a new house and now there's not a whole lot extra left. Would you say, okay, come back when you actually can put away 20K, or can they just start putting away? I mean, what would that minimum look like? Because it doesn't seem like a whole lot. You just bought a house, you now have all these new expenses.
So yeah, but realistically, you just bought a house, you got an extra $100 a month, whatever the case is, right? That's where kind of starting the conversation with Gil, Greg, and I will help you qualify, right? I usually say, listen, if you have more than $6,000 to throw into a retirement, then you want to look at a 401k, right? Greg can help you set up an IRA, right? Whether it's Roth IRA or whatever, Greg can do that for you, right? Get that kind of up and running. If we are in that situation where you just bought the house and you're just trying to stock a little bit away and a savings account's not going to get that rate of return that you want, right? But anything above that $6,000 is when you really want to start looking at a 401k, because if you get $7,000, that compound interest and Greg's rule of 72 and all these things that Greg knows about and can definitely speak to, makes that worth it, right? It makes putting in a 401k, for example, worth it. I don't think there's like a minimum to look at, and Greg or Gil might argue with me and disagree, but I don't know that there's necessarily a minimum to say this is when it's worth starting to save. Mm-hmm. So much as which vehicle is most appropriate to use to start saving, right? Pay yourself first, I always say.
And to piggyback off that, I completely agree. I don't think that the amount is the most important thing. I think it's the timing of it. The earlier, the better, really. If I'm talking about how unsexy budgets are, if I had my charts, I could show you compound interest and blow your mind. It is really, the timing is the most important part.
So speaking of timing, let's say you are more veteran consultant and been in business or have had your own business for a few decades now. And let's say you haven't quite set this up yet, but we were talking about, 10 years to go to Boca. Like realistically, if you're starting now towards later in life, what are some things you can do to kind of quote unquote catch up, if you will?
So
I'll take one
go for
a second. And then Gil, maybe you can take it.
Okay.
So we've been talking about 401ks, and I don't know if you guys are following the podcast that Hives Nation is putting out, but Jada and I did one, I don't know, a little bit ago, a month ago maybe, that we kind of talked about this, right? And the opportunity to make up lost time, right? So a 401k, if you don't use it, you lose it. It is what it is. And that's kind of where Greg's going, is like, it's not too early to start saving, just start saving something, compound interest, blah, blah, blah. But when we are 10 years into having this business or 10 years away from retirement, we have kind of an end date in sight. And I will say, usually you want to start this conversation around the age of 45 plus. If you're younger than 45, let's talk about our options there. But, the closer you get to retirement, the IRS offers these options to save larger dollars. We call them defined benefit plans. And they basically say, okay, I'm going to pick on Gil. Okay, Gil, you're closer to retirement than Greg is, so we're going to let you make up for lost time and get some really large tax deductions for you and the business but allows us to accumulate large chunks of money in a short window of time. They're tax deductible to the business, which Gil loves me for. He's super happy. They have a lower growth opportunity, right? But Greg's going to help with the investing of that part to make sure we hit some targets. But we can get hundreds of thousands of dollars per year in a predictable kind of manner that allows us to make up for that lost time when we are 10 years away from Boca. And Gil's going, you guys, buy some heavy equipment. We need some large tax deductions. Greg's going, your pot of gold at the end of the rainbow isn't going to get you there. Is that, so we call them defined benefit plans or cash balance plans.
Thank you. Thank you so much. We do hear a little bit of, is that, I hear something in the background. Is that just me?
No, we hear too, but I'm not sure what it is.
Hold on one second. Is that coming from you, Tali, or?
And then unmute the panelist.
Yeah.
He's kind of got some.
All right, there we go.
All right. Going back to the previous question real quick is how much to invest and how to invest. The earlier you start, the earlier you're going to get to retirement. So, you know, a lot of 20-year-old think it's not something they want to do because they want to go and travel the world. And I think my advice to them is start early and travel, and get to retirement earlier, and then you can do everything you want to do. And the second factor is how much income you made that year, because you know, if you had a slim year and you're only paying 10-15% in income tax, the saving put into a retirement, the tax saving is not as significant. However, if you have a year where you're paying 50% in taxes, the government gives you 50 cents on every dollar you put into your 401k. I would say that's the year you maximize your 401k and look at the defined benefit plan and try and put, because it's basically the government give you 50% back. And so that's kind of the two factors there, you know, how soon you want to retire and what kind of tax bracket you're on. So that's part of the metrics.
And Greg, do you have anything to add to that?
Yeah, I would say just to add on, I think those are the most important things. I think also to define what you envision your retirement to look like also plays a big part into that. Some people don't want to retire early, they want to work their whole lives, and some people want to retire early, travel. So kind of coming up with that plan and finding
Sorry, you caught me completely off guard. You've met people that really want to work all their lives.
Oh yeah, people who love their jobs and want to just keep doing
what
it.
I do. I'll work as long as you'll let me.
Yeah, absolutely. Or maybe people don't want to retire in Boca; they want to retire in Topeka. So those numbers will come out a lot different. And so what we do, kind of from my perspective, is finding out what that budget will be in retirement, what that number is, and then from there we can find out what number you need in order to find that financial freedom.
So you kind of just work backwards, basically, from what your end goal is.
Right.
Okay. Well, right now I'm going to go ahead and open it up to Q&A from our guests here. So feel free to type it in the chat, or you can use the raise your hand icon on the bottom. But we do have our first question, which is it better to make an LLC, Inc. or 1099 contractor? So which one, when you're starting your own business, which route is best to go?
I'll start. 1099 is kind of somewhat illegal anymore. It depends on the state you're operating in, but a lot of the IRS and the local state ordinance are specifically when you have one customer and they control your schedule, it's really hard to be independent contractor. So having an LLC gives you a little more ability to function as an independent contractor. Plus, it limits your liability, your personal liability. So the business is, so if you have assets outside of your business, they're not exposed to your business practices. As far as taxation, again, it varies from state to state because each state have different regulations. In California, for example, being a sub-S corporation is better than LLC. And again, it varies based on how many, what's your gross receipts, and do you want to hire more employees? Do you, it's just you? I mean, there's multiple factors. And again, the general rules is right now, most independent contractors are end up being sub-S corporation, but it's just a general rule. It's not one solution for every situation type thing.
So if you're here in California and you don't plan on bringing on any more employees, it's really just yourself. Would you say still go with an S corp versus an LLC? I
would say it's very close, but it's probably 60-40 sub-S opposed to 40. I mean, it's opposed to an LLC as far as but it's kind of almost like two different flavors of ice cream. It's pretty close.
Okay. More for retirement, we have a question here. It says, am I able to receive financial education or advice on investments outside of my retirement plan?
Yep. So I think that's probably my area.
Mm-hmm.
I think that is not only helpful, but I think it's probably goes back to our best benefit when building a plan. I don't like speaking about certain investments with people without knowing more of the background, because it should all go as part of a plan. So if I was to have a client inside a 401k that I'm meeting with, I would absolutely like to help them with the rest of their plan and give them at least some education or tips and tricks, things that I have learned that I think would be beneficial for them.
Cool. And another question we have here is, how do I get a 401k started?
That's a great question. I would say contact Jade and ask for one. What she'll do is she'll reach out to us, right? And between Greg, Gil, and I will qualify and go, listen, an IRA is better, a 401k is better. So realistically, the way to start is give us a call. Let's talk about what your goals are. Let's talk about, like Gil said, how much money did you make, right? Because that's going to be a big factor. If it's never too early to save, but all we need to do is write a plan document and flip you over to Greg to get an account set up, right? It's really pretty easy. I will walk you through the annual requirements, right? We're going to gather that census data or that compensation data from you every year. And we're going to qualify. We're going to decide whether or not you can put in $60,000 or if you can put in less. We'll handle a lot of that heavy lifting and a lot of those calculations for you. So getting started, just reaching out to Hive Nation. I know Jade will put up the contact information and give it to you at the end, and it's there on the beginning and everything. And if you're in a situation where you want to look at it, don't hesitate to reach out and we'll walk you through it.
Awesome. Thank you, Tali. And if I'm preparing for a major life change, let's say buying a house or paying for college, how does that affect my ability to save for the future, especially if, you know, I'm on a fluctuating income?
So saving for a house is a lot different than saving for college, in my opinion, especially depending on what whose college and when you're starting. So typically when we have people who want to save for a house, it might not make sense to put all of your money into the market at that point because it is fluctuating. If anyone's looked at the market today, It would have been a heavy hit if you were saving up for a house. But when you're saving up for college and you have a time horizon that's looking more like 15 years, 18 years, if it's a newborn, then we can take those downs in the market, because history has showed us that in time it will most likely rebound, if not go up exponentially higher. So I think that's an important thing, maybe talking to us or talking to somebody, is finding out how much risk you can take on comfortably and the time horizon for those investments.
Awesome, thank you.
One of the things that kind of tie into is you can withdraw money out of your 401k penalty free for when you're first time buyer. So it's another incentive to put money in 401k, because if you need that extra $50,000 in order to put a down payment on your house, you're still going to pay taxes on the money you're drawing, but they're not going to penalize you for early withdrawal. So, so especially this day and age where it's people struggling to find enough money for down payment, that can be a very powerful tool.
We have another question here. What happens to your Roth 401k after leaving a job? Where do you go from there? That's a great question.
Tali? What? Tali, do you know the answer?
I can kick that off for sure. So between Greg and I, we got you covered, right? If we're ready for a 401k, we can absolutely absorb that, prior IRA money if you have one sitting there, or 401k money from the company you just left, or whatever the case is, right? We can absolutely take those funds and put it into your own 401k, right? That way everything's kind of housed together. It's in a nice little bow. You can figure out where everything is. To Gil's point, if you want to take a loan from that money, you can do that inside of a 401k. You can't do that in an IRA. If you want to use it for a down payment on a house, you can do that in a 401k, right? Just by taking that prior money from your prior employers and sticking it inside of your solo 401k or your 401k, right? Alternatively, if you've got money sitting out here and we're not quite ready for a 401k yet, we'll get there, we're just not quite there yet, then we can get in touch with Greg and throw that rollover money into an IRA that Greg can help you manage, and I'll be quiet so Greg can pipe in and start chatting.
Yeah, exactly. So there are multiple options, and without knowing a specific situation, it's hard to say which one's right. But what I do love about our team here is we do communicate with each other really well, and we'll find a good situation for that. I think that there's pros and cons to both sides, and I think Tali laid out great points for why a 401k might make the most sense. It's nice to have everything in the same spot, easier to keep track of.
Thanks, guys. So basically, you can transfer everything over into different types of investments, whether that's a solo 401k or an RA and whatnot. But you're right, Greg, knowing where you're at and where you want to be, and almost like reverse engineer your finances to get there.
Also, but if you live in the company, you have a Roth 401k, you can roll it to either a Roth IRA, or you can, if you're going to start your own business and you start your own 401k, you can roll the money you deferred with your employers, and you can roll it to your company 401k. Okay, and there's actually some tools out there where you can take that money and fund starting your own company, but that's kind of a complex situation, but it's available.
Thank you. Do we have any more questions? Otherwise, I'm gonna go ahead and start wrapping it up. Thank you to our amazing panelists here. For our guests, they can be reached directly either through Hive Nation, the Hive Nation community platform, or you can call me directly or email me directly. But if we have any other last minute questions, please drop them in the chat. If not, thank you everyone for attending. And so, like I said, if you'd like to learn more on how to reach financial freedom or get in touch with any of our panelists, you can reach out to me. So I'm Jade Brandeis. You can find me on the Hive Nation community app. Oh, we do have one more question. So what is the difference between An SEP and solo 401k, and which is better?
I'll take that. So a SEP is a simplified employer plan, and then a 401k is a 401k, right? So two different types of plans. One is completely funded with employer dollars, okay? So a SEP is the SEP. The SEP is put in place when you want to get just employer contributions up to 25% of eligible comp, to get nerdy, right? The 401k is really effective when you want to get 401k dollars and lower your personal taxable income. So let's go to Gil's kind of S Corp situation, right? You was S Corp versus LLC, you kind of went down that road. Let's say you're an S Corp and you're taking yourself a W-2 salary. Well, in a 401k, let's say you pay yourself 50 grand a year, you can take 50 grand a year as our W-2 income. We've got 20,500, assuming you're under the age of 50, 20,500 off the payroll and sticking it in your 401k. Okay, that lowers your personal taxable income about 20 grand. Okay, it's not exact science. Gil's rolling his eyes because it's not exact dollar for dollar, but pretty close, right? So now instead of being taxed on 50 grand, you're getting taxed on 30. Pretty good deal. Then on top of that, you can fund 25% of compensation. Please don't make me do math. I don't know what 25% of $50,000 is. If I thought about it real quick, it'd probably be 12.5. Okay, thank you. So 12.5 is now an employer contribution. So you just saved yourself 32,500. Math is hard on the cost. 32,500 in a 401k. Now let's take that same $50,000 and put it in a SEP. Now in a SEP, you can only get that 25%. So you're only getting that 12.5. Okay, that opportunity for that 20,500 to go in the plan is not there. Which one is better? Hard to say. It really kind of depends on your situation. And that's where having a conversation with either of us, Gil, Greg, or myself, to really talk about, okay, what is your situation? Where are we at? What are you looking to save? What's the goal? Can help us qualify you individually for a SEP, a 401k, or something along those lines.
One other advantage of a 401k is you can borrow the money out of 401. I mean, you can borrow funds from a 401k. You cannot borrow funds from SEP. Okay, and going back to if you have a major need for cash, you have to pay back, but at least you have access to the cash, and you're basically borrowing from yourself. It just, you limit how much growth your 401k will grow. But if you need access to cash, you can borrow the money and pay it over 7 years, right, Tali?
5. Typically 5.
All right.
And if we're buying a house.
All right. So that's the one advantage for solo 401k over a SEP.
Thank you. We have one more question. If you have multiple corporations, can you manage 401ks through each?
This is a
Short
good
answer is no.
question.
Go ahead, Tali.
I'm sorry. I talk a lot. I think I like to hear myself. So this is actually a really important question. Gil and I come across this all the time. So the IRS has a rule called the controlled group rule. And what it says is if you have ownership, enough common ownership in multiple entities, we need to pretend that they're one entity for retirement plan purposes. So let me give you an example. I own an ice cream shop and I own a law firm. Totally unrelated, okay? I'm 100% owner of the law firm and I'm 100% owner of the ice cream shop. Could I have two separate 401ks? Sure. But in the eyes of the IRS, whatever we do for one, we have to do for the other. So we might as well make it a cost effective, typically make it a cost effective and do one plan for everybody. Because I can't maximize over here and minimize over here without putting them together and pretending they're all one company. So if you do happen to be in a situation where you own multiple companies and there's enough common ownership, meaning 80% or more in each entity, right? You own on an aggregate, then we do need to pretend they're one company. So we wouldn't get 20,500 in company one, 20,500 in company two, and 20,500 in company three. We wouldn't be able to do that, right? The IRS gives us individuals one 20,500 limit in all 401k plans across the world, right? One 20,500, regardless of how many plans that we're actively participating in. Okay. One thing I want to mention, if our spouses are business owner, also, we need to look at that because again, common ownership, family attribution is something that the IRS talks about. Basically says if Gil and I are married and Gil's 100% owner of company one and I'm 100% owner of company two, whatever I own, Gil owns. So if I have employees but Gil does not, and Gil sets up a 401k plan for himself, Tali's employees are part of Gil's plan by law. So there's a lot of these little nuance factors and things that need to be considered when we are establishing plans. So long-winded way of saying potentially yes, but it depends on your ownership in each different company.
Fantastic. Thank you, Tali. And I love hearing you speak, so speak away. I always learn something.
Usually in those complicated questions, I'd just ask Tali anyway. So.
But Tali brought another, it kind of almost touched on it, so I'm going to throw that. One of the benefit of being an independent contractor is if you have a 401k and you choose to employ your wife in your business, you definitely can double the contribution every year because you can put as much money in your spouse's name as an employee as you can put in your own. So if you seasoned contractors and you have enough cash flow and you want to put more money away every year by hiring your spouse and paying him $50,000 salary or whatever is reasonable, they can definitely put 20,500 if they're under 50, and then the company can match it. And if you start multiple all those 20,000 and the profit share and everything else, you can put significant amount of money into your retirement and get to the retirement age much quicker.
There we go.
Yeah.
I love to hear get to retirement much quicker.
Yeah.
But anyway, thank you all for coming here today on your Friday afternoon. Thank you to our amazing panelists. And as I said earlier, if anyone would like to get in touch with them, you can reach out to me at community@hivenation.com or directly through the app. So what we can do at Hive Nation, we can walk you through the entire process of helping you set everything up from your corporate formation to your retirement benefits, or if you're leaving a company and need to roll in your current 401k, or you're planning to buy a house, whatever stage you're at, we're here to help and can get you set up today. So again, email us at community@hivenation.com to start your journey to financial freedom. Thank you.
Thank you.
Thank you, guys.
Good night.
Goodbye, everyone.
See you in Boca.
Yes.